Now we know that there are various heads under which the items of accounts are presented in a balance sheet. Now let us come to asset side first. The first heading on the asset side is fixed assets. Let us see how various headings are shown or the various accounts are shown under this head. Remember, they have to be shown in the same chronological order. So the first item here is goodwill. Then we have land. After land, the third item that appears is building. Then the fourth item that appears is leaseholds. Then the fifth item that appears is railway sidings. Then we have plant and machinery. After plant and machinery, we have furniture and fixture. Then we have development of property. Then the ninth item that appears is patents, trademarks and copyrights. Then students, we have livestock. That means cattle and other kind of animals that you keep. It is most very important in case of dairy industries. Then we have vehicles. Now students, remember, it is in the same chronological order that you must remember them. And while preparing balance sheet, you must present them in the same order. Let's say a particular business has plant and machinery, building and vehicles. Then while preparing the balance sheet, you will write the heading of fixed assets, and out of these you must remember that building should be the first one. It should be written on the top. Then we have plant and machinery, and then lastly vehicles. So if this order is not there, you will not get marks. You have to remember this in the same chronological order. The same method applies to other major headings which have different items under them. Coming to the second heading. The second heading on the asset side is investments. Now, various items that are shown in investments are, the first one being investment in government securities. Any kind of government bonds, any kind of government securities that you purchase are the first item to appear under this heading. Then investments in shares and debentures and bonds, that is investments in shares and debentures of any other company. Mind it, besides this, it is also required that you have to mention which type of shares, that is preference shares or equity shares, whether they are fully paid or partly paid. What is the time of maturity of bonds? All these details have to be mentioned along with the B heading or subheading in the investments heading. Then we have investments in immovable property. Let's say a company purchases a building as an investment. So that investment would appear as an immovable property. Then investment in the capitals of the partnership firms. It is quite possible that one company may enter into a partnership with another company. The resulting business is not a company business, but it is a partnership business. So the amount that you have invested as capital would be taken as investments. The third heading on the asset side is current assets, loans and advances. It has got two subheadings under it. The first subheading is current assets and the second one being loans and advances. So let us move to current assets first, that is the first subheading. The first item that appears in this subheading is interest accrued on investments. That is, whatever investments that we have made, the amount of interest accrued on those investments. Then stores and spare parts. Then we have loose tools. Then we have stock in trade. This can also be referred to as inventory. Then work in progress. It represents those goods which are neither in finished form nor in raw material. They are in between. The work is not yet complete on these goods. Then we have sundry debtors. Now students, sundry debtors can further be divided into two parts. The debtors which have been outstanding for more than 6 months are written first up, and then the other debts. Remember, out of these total, we must subtract less provision. That is, any provision on doubtful debts should be subtracted out of the total of these two. Then we have cash balance. And lastly, balance in the bank account. Remember, again, it should be represented in two different subheadings. The first one being with scheduled banks, that is the amount of money that you have kept in your various accounts in the scheduled banks, and with unscheduled banks. So students, the first major heading was current assets, loans and advances. Under this, the first subheading was current assets, and these are the items that appear under this subheading. Continuing with current assets, loans and advances. The second major heading, that subheading that appears under this heading, is loans and advances. Remember, we had already understood about various items that appear under the subheading of current assets. It has a whole lot of items that appears under it. So now coming to loans and advances, the first thing that appears here is advances to subsidiaries. That means any sum advanced by this company to its subsidiary companies, or any advances to the partnership businesses in which this particular company is a partner. These are the items that appear first up. Then we have bills of exchange. We all know bills of exchange, but remember, since it is asset side, it would actually represent bills receivable. BR represents bill receivable. Then advances recoverable in cash or kind for value received by us. That is basically the amounts that would be recoverable by us. Then balance with custom and port trusts. That is any amount that you have deposited with port authorities or custom authorities and is recoverable by you. It includes various benefits that one can draw on duty drawback schemes. So now students, we know that current assets, loans and advances has got two major subheadings. The first one being current assets and the second one being loans and advances. The fourth heading is miscellaneous expenditure. Remember students, miscellaneous expenditure here represents the amount of expenses that have been incurred but have not yet been written off. So specifically it includes items like preliminary expenses, then expenses including commission or brokerage on subscription of shares or underwriting commission. We can broadly say that this item includes underwriting commission and expenses on issue of shares or debenture. Then any kind of discount that is allowed on issue of shares or debentures which has not been written off appears as under this heading on the asset side. Then interest paid out of capital, that is any amount of interest that you have paid out of capital appears as miscellaneous expenditure. Remember, along with this you have to specify the rate of interest as well. That is at what rate this interest has been paid. Then lastly, development expenditure. This amount obviously represents the amount that has not yet been adjusted. So now students, Miscellaneous expenditure includes preliminary expenses, share issue expenses and underwriting commission, discount allowed on issue of shares and debentures, then any kind of interest that is paid out of capital. It must specify the rate at which this interest has been paid, and then lastly, any kind of development expenditure that has not yet been adjusted. Now, this brings us to the fifth heading, that is profit and loss account debit balance. So, the fifth heading that we have is profit and loss account, that is debit balance. We all know, students, that debit balance in profit and loss represents loss. So, when we say debit balance, that means any loss that is there in the profit and loss account should appear on the asset side of the balance sheet. But remember, this amount is the amount that could not have been adjusted out of reserves. So, we must specify here, that is only the amount not adjusted out of reserves on liability side. That is, first of all, we will utilize the reserves to write off losses only in case when the reserves are not available, and then the profit and loss account shows certain debit balance. Only in that case this will appear on the asset side of the balance sheet.